Hello, all. Good evening. So, welcome to today's index analysis. So, let us get started. First, let us start with the end of the day data of Friday. So, for this, you can use any compilation which gives the end of the day data. So, when we look at the I'm using this Twitter handle for using that data. So, when you look at the positions of players on Friday, just a minute, you find that FIs, they sold calls, they sold puts, so they're kind of, going with a neutral strategy. It's not too bearish, but not too bullish also. And with the real, clue was given by, prop desk, who were, unidirectionally bullish. They, bought calls as well as they sold puts, and this number is hardly anything. I mean, they're selling a future. So prop desk is, very, very bullish. Because they bought massive amount of calls and they also sold puts. And if I also remember, they've sold puts. And when you cross, compare this with the retail data, you find that the retails have gone bearish. So it's obvious that when the retails sell calls such a massive quantity, again this is bearish, and they also bought puts. So now if you roughly add these numbers, that is the selling of calls and buying of puts of retail and the FIs and prop desk, you come to the conclusion that overall the smart money, that is FIs and prop desk, are towards the bullish side and the retail are on the bearish side. So it is obvious that the market will take the bullish direction. That is the smart money's position. It is almost similar to last Friday analysis, where the smart money were on the bullish side and retail were on the bearish side. So almost similar thing has played out. And interestingly, the DI is also what net futures. So with this bias also, we can come to the conclusion that the EOD data is kind of bullish. So that's why I mentioned this in the thumbnail, that the data itself was bullish. We just have to look for long trades. And coming to today's context, this was about the Friday's EOD. So when you come to today's data, we find that this worked in continuation. I mean, this hypothesis was proved right because when you look at the Nifty's overall today's action, you find that there is more puts being written. Almost 2.46 crores of puts being added today compared to 68 lakh calls. So it's roughly, you can say, four put writing is almost four times than that of call writing. And you can also see the massive call unwinding taking place across. So the supports are getting stronger for Nifty on the lower side, and with hardly much resistance in the coming time, if Nifty breaks the resistance levels, maybe not today, but in future definitely we could go for the higher levels. And you look at the overall OI level, you find that the 18,300 is it's pretty much balanced, the number of calls and puts. And you can also see that the call walls are much bigger. Sorry, the put walls are much bigger than the call walls, and the call walls are very small. So this also gives a very bullish bias to the Nifty's overall open interest. And you can also see that the PCR is zero point 0.9, which is above the neutral territory of zero point 0.8 and on the bullish side. So the open interest is also very hinting a slight bullish bias post today's put writing. But the weaker index today was the Bank Nifty. So when you look at Bank Nifty, you find that there was more call writing in Bank Nifty compared to the put writing. You could see 1.28 crores of calls being written was puts 69, like almost half of the half more. Look at the call writing. So this is the overall situation of the so Bank Nifty was relatively underperforming. Bank Nifty has a huge call wall, especially at this 44,000 level. You can see this is a massive call wall. Once 44 is taken out, I think Bank Nifty can straight head towards 44,500. So this must have this mind. It could trigger a good rally towards 44,500. Now coming to intraday, when you look at the Nifty's uh, how the OI change played out. As we had the bullish bias from EOD, you could see more put writing as it proceeded, and there was more put writing, puts being written, and some call unwinding as well. But after Nifty reached a certain level, that is after reaching a certain point of time, this put writing almost stopped. It almost ceased. You can see the falling enthusiasm of puts also in the same graph, the same bar. You can see that some enthusiasm towards writing puts getting reduced, and put unwinding started, and you could see call writing also at some level. But overall, since the overall put writing was more for the day, market, Nifty closed almost towards the highs. So there was not much further interest to write puts. Maybe if you see at around 12 p.m., this was the peak point of Nifty, and this is where actually the limit selling took place. That is 18350 zones in the Nifty futures, and the price just closed around that zone. So this was about Nifty's OI change. Coming to Bank Nifty's OI change, Bank Nifty was a bit more towards the negative side than Nifty, but it ultimately gave a good closing. In fact, despite this data, so if you see. There was more call rating, and you can see both call rating as well as put rating. Here, you get a negative bias towards Bank Nifty because there's more, call rating, and there's put unwinding. But overall, you could see that it was a pretty sideways kind of data with both put unwinding. You could see call unwinding, put unwinding, call writing. So a bit bearish bias on Bank Nifty. But since Nifty is very strong, should not think of shorting Bank Nifty because of such a data. And this is just time-based correction which Bank Nifty is trying to do. So overall, this is coming to the order flow. Order flow, when you look at it, you find that the first candle is very very healthy, and delta is also pretty much good. And post that, the delta went sideways. I mean, uh, it reduced. This is kind of divergence. I talk about the delta concept. As the price goes higher, it should go up with the higher delta. Then that move will sustain. But you could see delta reducing, and that's why you could see some more, longer wick coming down to gather the liquidity. And when you look at this from a imbalance chart, you come to another conclusion that, like for example, at this level, you could see at this 50K they've punched. This definitely cannot be an aggressive seller, right? So this has to be a passive buyer. So it's a passive buyer at this level, because if it was an aggressive seller, the price should have broken and gone below this POC, right? So this POC should have been broken on the downside if it was an aggressive seller, but no, this was a passive buyer. That's why the price propelled on the upward direction. So this is also a good standard trading setup, where the price closes above POC with a good delta. And then ultimately, why I mentioned that there is uh, a limit selling at 18350 zones is because we could see the price levels in between at 12 o'clock. You find that this is the point which I'm referring to here. After this initial rally, price took resistance at this level, which is 18350, a psychological level also. You could see this good high imbalance delta at 18350 zones. Now it's anybody's guess that this cannot be an aggressive buyer, because if it was an aggressive buyer, the price would have propelled on the higher side. Now since it's not an aggressive buyer, who this can be? This can be a passive seller. A passive seller is also called the limit seller, and accordingly, the price plunged easily 50 points because of the passive seller context. So overall, identifying such players helps us to get out of the long positions if we are in the long position of this trade. And also at that time the put writing receded. So OI also hinting that in the same direction, and the price also made a good at least 50 point dip. And then post breaking the VWAP, you could see that the price starts to sustain around the point of control, and it's not going down. Okay, despite the high delta, the price is sustaining at the POC. You can see this is the highest point, and it's not able to go down. So this is again confirming that the limit buyers, I mean, who were there here, price is finding support around the same morning zones. In fact, the zone has shifted on the upside, and price rallied on the upside. So this is how, with the help of point of control, one could easily gauge the sentiment of the price in addition to delta. Right, so point of control and imbalance are pretty much handy as the tool. And then price just took resistance again at the same level, right? And then it closed here. So maybe today was there was no plan to break 1850 levels, and there's no context also. That's why the price closed at the higher levels. Now coming to the bank nifty order flow. Bank nifty order flow was a bit weaker because of the OI context. If you look at it, the first candle also was negative, and the delta also was negative. But this delta had a bit of loss of negative delta. In that sense, it is not very bearish because it has lost some negative delta. And if you try to use the same understanding from the Friday's high, you find that there is a limit selling which is being present at this level. You can see that at the same zone, 33k of imbalanced delta you can find exactly at the top. Now this for sure is not aggressive buying. This is limit selling, and the price again got rejected from the same level, and it plunged down. Bank nifty why was also context, and this is very logical because when there is limit selling at these levels, and if the smart money has done the limit selling level, it's obvious that smart money will sell calls here than selling puts. So that is why you could see bank nifty being much more weaker, and the price plunged lower. And this is a repetition of the same concept. You could see that delta is negative, but the price and this negative delta is mostly concentrated at this zone. You can see 27k is here, half of this. So when the price sustains above this POC, despite this data, and makes a very bullish candle, irrespective of the color, this is a very bullish candle because of the long lower wick. So it means that price has some support here. There's some limit buying. So you should become cautious if you're on the downside, and price rallies upside. But since it has a very less strength to go upside because of the call writing context being present in bank nifty, so the price is not able to travel much. It takes resistance at VWAP, and it takes resistance here also at VWAP with multiple POC. You can see here that the POC levels price is not able to cross, and price gets rejected multiple times the same level. So such levels act as a critical resistance for the price, and the price headed downwards. Once this early money level was broken, it was obvious that higher delta would come. So from 50k you could see a higher delta of 79k. But another interesting thing which happened here is the price is not able to sustain below the POC again, right? So this 79k is entirely concentrated because you can see around this level where 62k is fine. But this is not an aggressive buying selling. This has to be a passive buying which is taking place. So this is a passive buying, or it can be a context of trap sellers. But sellers definitely won't come and short at the lower level, right? They will short at the higher level. So this makes a case for passive buying, and the price sustains above the POC, and you could see how the price rallied on the upside with this context. So interpreting order flow chart with delta, with POC, with and, the understanding that who is the aggressive player or who is the passive player helps to gauge the direction. And ultimately price closed at the same levels. It took resistance around the same zone, right, where it got rejected from the morning, and it closed side. So bank nifty was very sideways, and it was nifty which was in leading the index. Coming to the price perspective, broadly we can see that the bank nifty, first let me discuss bank nifty. Bank nifty is making this beautiful pattern, and the price is consolidating inside this pattern today also. I thought this pattern might get resolution today, but still um, it was more price was moving here within this kind of symmetrical triangle pattern, and then You could see in the first price took resistance at the same trend line. It hovered around that zone, and it came towards the lower part of the zone. It took support there, and it closed somewhere in between. So it's very interesting to see the action taking place. Maybe tomorrow, or if price spends more time, maybe day after, I am expecting an action like this. But it depends on the context, many other things. Let us be positive, and then looking at the Nifty chart. Nifty, last time we discussed that Nifty had taken a more correction, I mean deeper correction compared to bank nifty. So let me first remove today's action. So we see that uh, when I discussed last time, for this downswing, nifty closed above the 0.78 retracement level, and it is somewhere sustaining at that zone. So now today when we continue that, you could see that uh, yeah, it's 20. So Nifty took support from the 0.7, it's the same level, and it broke the golden ratio, and it also hit the point 0.5, and it went towards the 0.38 zone, and ultimately it spent a lot of time around these zero point 0.5 and zero point 0.5 50% zone, as well as the zero point 0.5 zone. So what is happening here essentially is the price for this swing, it came down, it took a bounce towards the 0.50% level, and then around 50% and uh, golden ratio level, the price is hovering. So if the price doesn't break the 50% level, it is since it's above the golden ratio, generally what happens is it goes back towards the previous swing. So this potentially can happen. Let's look at, I mean, today the closing is obviously bullish. Let us wait further away the EOD data. If the EOD data is like towards the bullish side and the clients are towards the bearish side, we can expect that market going test this highs tomorrow. And coming to the yeah, this was about Nifty and dollar. Dollar is still much sideways. For any strength to come, the dollar has to collapse, and but the this is USD INR. First, let me show the dollar. For any strength to come in the movement, the dollar has to fall. That's the yeah. Earlier we discussed that dollar, for this down move, it has broken this 0.38 level, and it has also given a one close above 50% zone, and it just came back and it's around this zone. So till dollar is in around this zone, the price would remain choppy, and I want the dollar to go down for us to comfortably go higher. If the dollar doesn't go down from here, and it's takes out the 0.68 level and it goes up, so we probably could head downwards towards temporary downward correction. So again, it depends on the US debt ceiling negotiation, which is still going on. So hope there's some resolution. I think still the deadline is there, that is I think month end is the deadline for the negotiations to complete. So price might remain choppy. um, so overall, this is the understanding from the dollar index and macros perspective. Yeah, that's it. Hope this analysis was helpful. Thank you.